Hey everybody, what's going on? My name is Matt and welcome back to Crypto Kings, and in today's video I'm going to be talking with you guys about how Shiba Inu looks like it is going exactly to plan. If you guys are new, make sure to drop a like and subscribe. Let's get right into it, folks. So if you guys haven't already seen what we are working with here, folks, in terms of our trading on the day, we are up around 1%. But what is interesting that I wanted to share with you guys is what I personally noticed about this trading pattern, because when we look at the 7-day, folks, honestly, it can make you a little bit uncertain. Of course, we see our all-time peak all the way over here at around 87/88, and that's amazing. I know a lot of people were worried after about how bad we were going to crash, and unfortunately it did head down into the 50s a little bit after that. But I wanted to go over today, in my opinion, what I look at for, sort of deciphering what kind of pattern this is and why I'm a little bit hopeful for the future. There's nothing set in stone. I can't guarantee anything, but I am pretty hopeful that SHIB is not going to head down to, another decimal place and people are going to lose their money by 10x. I really don't think that's going to happen, and I would like to evaluate some of those scenarios. So let's get right into it, folks. So what I'm essentially looking for when I go and I take a look at something like this is a few things. Now, the main thing that comes to my mind is what kind of pattern this is. And if you guys don't have every sort of pattern memorized, there's a lot of them. The best thing you do is go and look up different types of wedges. This is a very simple, very kind of casual crypto trader thing, and I really think it's a good thing to try to do. So these are some of the main sort of wedge patterns here, and ideally the way this works is you're trying to understand the way human psychology works, in the sense that whenever you're looking at a high, obviously the top of wherever this is, that is when people are determining, yeah, this is a good time to sell, this is a good time to get out. And vice versa, whenever there's a bottom, people are considering this to be a bottom, people are considering this to be a good time to buy. So which of these wedges applies to Shiba Inu right now? Well, I've spent a long time kind of studying this chart here, and what I am seeing is a bullish falling wedge, and I've seen this happen a lot of times before, but when it comes down to it, a bullish falling wedge looks something like this. And again, it's not 100%. There's never really a set in stone kind of movement, because the market doesn't move exactly in accordance with these wedge patterns, but all around, this is looking like a good sign, and I definitely do think that in the future, I think there's still some money to be made. Speaking of money to be made, if you guys want to check out Webull, guys, top of the link in the description. It is so easy to do. Literally, all you guys have to do is go over there and make an account using my link, and if you guys do, you guys get 2 free stocks valued up to $2,300. People have gotten lucky and gotten free shares of Apple, free shares of Facebook, all that stuff. So definitely do go ahead, and you guys could also trade Shiba Inu over on Webull. So it's a great idea always to start building a stock portfolio, a crypto portfolio. You guys could do that with my link in the top of the description. Of course, if you guys like me, you want to support the channel, I get a couple free stocks as well, and I always do appreciate it. So when it comes down to it, folks, what we are working with here, in my opinion, is a bullish falling wedge kind of pattern here, which again, it's never really set in stone. It never really works quite in accordance with the way that these sort of graphs do. But essentially, again, you want to try to track lower highs and lows that kind of converge here into one spot. Now, unfortunately, there is sort of another scenario which is applicable as well, which is a bearish rising wedge, as you guys can see. If we are to track the bottom here, this is a bearish rising wedge, as you guys can see, of course, is headed down here. So these are the two potential scenarios. One is bullish, one is bearish, and unfortunately, the way this is moving feels kind of in the middle. But regardless, I still think that based off of the way in which a bullish falling wedge starts, obviously headed all the way up here, the way a bullish falling wedge kind of starts, to me is a little bit more sensible than the way a bearish rising wedge starts. So again, it really depends on your sort of interpretation of this rise from the 27th up and through the 28th. So depending on how you interpret this rise here, I think determines how you will interpret the way these wedges are going to work. But there is a little bit of another kind of bit of information you could use to evaluate this as well if you wanted to, and that is, of course, looking at some of those indicators. The relative strength index, I always like to take a look at, and I always do here on the channel. So the relative strength index here, of course, we head up all the way to around 8 8.4, 8.3-ish. So, a little higher than what is considered normal, obviously between 30 and 70. So we definitely are well exceeding that. And obviously we get some very predicted, pullback, some extreme pullback, but regardless, some pullback nonetheless. And as you guys can see, the relative strength index is creeping up, meaning that with what we are seeing here, it is very possible that there is some headroom still in this relative strength index to continue to move up. So we do have some headroom. So in theory, we could go from 72 up to maybe 75 or 76 right now without exceeding the relative strength index. So if we did, that would be considered, quite normal and within these acceptable parameters. I also like to check the MACD, which gives you kind of a good idea as to whether a buy or sell is in order. And of course, you guys can see it is slightly on the buy. It's not overwhelmingly buy like it was here on the 27th, but you guys can see it definitely is out of the red, it looks like. So that is always a good sign, always a good indicator of, some bullish momentum coming here in the near future. And again, the problem with, predicting whether or not we're going to get a bullish or bearish trend is things never really follow these indicators 100%. Things never really follow, wedges and patterns and movements 100%. They always kind of move on their own, and it's up to you to kind of round to the nearest sort of trend. So again, I could probably show this to 10 different traders, and they'd probably give me 10 different answers as to what this looks like. But I think it's best to go with our hunches and intuition, as well as, combining all of these indicators and all of these movements to make the best decisions possible. That's the best we can do, right? There's no alternative out there. That's the best we could do. Of course, when we take a look at the Fibonacci retracement, which you guys can see, we did look at this in our last video on here as well. So when we take a look at the Fibonacci retracement, you guys can see it is analyzing the bottom of the run, which is around 57, and the top of the run, which is around 74. So it has charted out some new territory here. So as you guys can see, from 57 to 74, it has lost around 72.4% of those gains, or 71.4% of those gains, leaving us with a 78.6% sort of decrease here on the line, and that's where it bounces off of every time. This is pretty good news because, again, we are retaining some of those gains made. So although we crashed down to 57, it looks like every time we head down to the 78.6% line, the market considers, hey, this is a good time to buy back in. So it looks like 60 is kind of the spot, and that's what I talked about in my last video, and it's nice to see that materializing and coming true. It looks as if that 60 line is going to be, the line of support for the foreseeable near future. At least that's my hope. Now, again, there are some circumstances which could change this. Obviously, it could take a nosedive tomorrow. I mean, it could. It's not likely. I don't think so, but it is possible. So again, definitely do be careful, guys. But the best we could do is try to look at all of these indicators and make the best guesses we can. And when it really comes down to it, what we're trying to look for here is indications of safety, of protection, that it's not going to crash all the way down, and I don't think it will, but it always does make me feel better to see things like this, like the 78.6% line here being a great line of support, it looks like, for the future. So even if, this continues to trade kind of erratically, as long as it stays above the 60 line, I do think that will be good. And of course, I think psychologically, like, the 60 line kind of feels like good. It feels like it's closer, to shaving off a zero, where getting into the 50s and 40s, it might seem like a, flash crash kind of imminent. So that's definitely best to avoid. I think it's great that we could stay above 60 and try to head to that next decimal places. Just on a psychological level, I definitely think that would help a lot. So that is that, folks. Thank you so much for watching. I hope you all have enjoyed. If you guys did, sure, drop a like, subscribe. My name is Matt. See you guys on the next one. Peace.